Hello, lovely people. Welcome back to my live trading session. We are looking at the MES right now. MES, for those who don't know, MES is futures. So with the trading markets, we have Forex, we have stocks, we have options, and we have futures. And I decided to trade futures. But before I trade every day, there's my routine. I go and check what is happening economically. Because every day there can be a couple of announcements that can make the markets go erratic or make it go crazy. So I go to my FX book to check what's happening, if there's going to be a big news or not. So if I go to my FS book, the website is over here, and I put the website down below. There's my FS book. I only choose these two options. Let me get it back for you so you can see it. So if I go to my FS book, I click over here and I choose only the US out of the flags. Then I pick the high impact news and the medium impact news and I apply. So after applying, I can see what's happening on Monday. So on Monday, all the news we have medium impact, which I don't really care about it. I care about the high impact news. So for the whole of this week, Monday, we don't have any high impact news. If you see the red, that is the high impact news. So on Tuesday, we have high impact news. On Wednesday, we have high impact news. Thursday, we do have, and Friday, we do have. So if I'm done checking, then I come to my charts. So looking at the charts, if you are new to this, it might be a little bit confusing. But then what I do on the first thought of the chart is open the 4-hour chart. The 4-hour chart to show me what is happening. And I see a bigger picture. So on the bigger picture, I look at the structure, the market structure. And on the market structure, if you don't know what market structure is, I'll be doing a video on market structure. You can see the 4-hour chart is bullish. That means the market is most likely going up or will be going up. Then I have my 15 minutes chart over here. I'll mark a couple of things on the 15 minutes chart. I'm going to explain it all step by step. So when I check and I see my market structure is bullish, then I come and look for the supply and demand. For all those who don't know what supply and demand is, it's a strategy of trading, and that's what I use. I trade supply and demand. So that is what I apply to my trades. So with the supply and demand, I look for two places. I look for the demand zone and the supply zone. Over here, this is my 4-hour supply zone, and it seems the market is pushing towards a 4-hour supply zone. The supply zone is a place where the market hits the wall above, and the demand zone over here is a place that the market hits the wall below, simply put. So I marked my supply zone over here. This is supply zone because the market hit the wall and reversed. And this side is also a demand zone. The market reversed from there. The market reversed from here upwards. The market reversed from here upwards and here upwards. So I mark all these places. So when the market is going closer to these places, I zoom in and look at the reaction. So assuming if the market is getting here, I'll be looking to trade or short the market down, meaning that if it gets here and it starts showing me signs of going down, then I'll short. But then if it gets here and it's still bullish, meaning that the market is going up, I'll let the trade slide. So that's basically my strategy. And this is what I'm predicting. So I'm predicting that if the market gets here from 7,602, that is 7602 to 7609, the market might probably short. So I'll be looking for shorts over here. If it comes down below from 7576 to 7584, and it shows me bullish reaction. I mean, it shows that it gets here and it bounces and it starts going up. I'm going to buy. Also, if it gets here, you see the long wick over here. If it gets here, that is 7556 and 7562. I'm also going to buy if it shows me a bullish reaction. And over here, the same over here, here and here and here. But I'm predicting the market might bounce from here or here, and if possible, this side. This side, I think, is the institutional zone. The institutional zone is a zone that most institutions think is a fair price and they buy from there. Okay, so I showed you where my supply and demand zone is. Now I'm about to show you a very important thing. That's the previous day high and the previous day low. So over here, let me zoom in. Over here was a previous day low. That is the place where the market reversed. And here is a previous day high. That is the highest point of the market when it reversed. So the previous day low is the lowest point of the market where the market reversed. And the previous day high is the highest point of the market where the market also reversed. So I label it PDL and PDH. Let me change this one and make it PDH, which is the previous PDH, previous day high. Okay, so I showed you the market structure, I showed you my supply and demand zone, and I showed you my previous day high and previous day low. Now come to show you the liquidity. Liquidity is where the markets move swiftly and take stop loss, a hand stop loss. So over here, you see how the market worked down here. It took this liquidities over here. It took the liquidity here and it took the liquidity here. So if I look at this market, I see a couple of liquidities here. I see the first liquidity here and I see another liquidity here. So if market takes this liquidity and take that liquidity, I'll be comfortable that the liquidity grabbing is done. Then I'll be looking to long. This is what we call the liquidities over here in this sections. Because people put their stops over here, so the market comes and grab their stops and continue what's doing. Now let me show you what I will be looking at as my entry. So this will be my first entry over here. I'll be entering from here. That means I'll be buying from here. After the liquidity here is taking these two liquidities, after these two liquidities are grabbed, then I'll be looking to buy from here. And if I buy from here, I'll be looking to take profits over here. I take profits using market structure. So that is where I'll be having my TP. We are waiting to have the market open at 9:30. Right now the time is 9:07 a.m. So let's wait to see what the market does. And again, I trade MES. That is a micro ES. ES is the S&P 500. So I trade futures, MES, and I'm waiting for the market to open at 9:30. Let's wait and see what happens. Thank you. Meet you when the market's open. Bye.